All right. For the people on chain, this is the weekend update. This is January 20 or January 14th. Let's just get started with it. So let's pull up with the standard market update here. Last week we had the ETF approvals. ETF approvals pretty much went through. I was personally a little bit on the side that the ETFs would not get done. Pretty wild ride with it going up and down. And starting on Friday, it started to dump down. Um, as I mentioned before, when you're starting to look at these Bitcoin options, a lot of the options have basically essentially on the 12th and the 26th of this month, that's when options close. So we sort of expected a little bit that, hey, this Friday, options would start coming down. It would be a little bit of an issue coming into the weekend as well. That's a long weekend. A lot of people just take their money off the table. They don't really care about it. I have much to say about the Bitcoin ETF and sort of where traders are on that, but for now, look out. The next date is the 26th. If we're going to get any sort of pump or major move, you're probably going to be looking sometime around the 27th in 2 weeks. But I think if you're a trader as well, should just be really, really careful about the ETFs. But I will say more about that. Kind of continuing with the options, Bitcoin right here. If you take a look, max pain price is around 41,000. I wouldn't be shocked if we hit it. I think that's really, really crazy to hit the max pain price. We haven't seen max pain prices hit since 2021, when there were a ton of contango unwindings that really, really nuked the markets. I'm talking 20-30% in a day. Looking over to Ethereum as well, you're looking at 2,300. I, again, wouldn't be shocked if we hit max pain at this point. I have a little bit to say on the ETF, but I'm going to kind of continue just talking about the stablecoins. Stablecoins are still going up. Things are being generated, volumes going up. Looks like on-chain economy is doing pretty well here. Much of the market is still dominated by Tether. Nothing too crazy there to see. Looks like Latin America, Africa, and other countries are really, really enjoying their stablecoins. Next up here, let's talk about DeFi. As the market is starting to sort of unwind, I'm pulling up here some stablecoin yields. It looks like everything's sort of in the 8 to 7%. So again, a lot of these traders are putting in their Ethereum. They're borrowing stablecoins and then using the stablecoins to rebuy Ethereum to gain leverage. When I see stablecoin yields sort of in the 13, 8, 9, granted this 13 is a pretty small TVL on Polygon. That's only around $4 million, where you can see there's 13, 3, and other large $1 million trades going on other chains. I start to get a little weary. Typically, I would like to see these to be a small amount larger than standard lending rates. So I think 10-year and 2-year in traditional finance today, it's somewhere between 4.8 and, if I'm not mistaken, 5.5%. So seeing a little bit of this much risk premium added on just for cryptocurrency is a little shocking, because it usually means the demand is probably just degenerate gambling. There's people out there that think they're going to earn a lot more crypto by leveraging. And again, just walking into the Bitcoin ETF, it has just been a little scary. And I think most traders right now should be a little scary. I wanted to pull up a little bit of Polygon. So this week, we saw the Bitcoin ETF January 15th. That prediction market unwound. So Polygon, people were talking, and Polygon did numbers that are larger than OpenSea. Again, I've said prediction markets are going to be the new hot thing this year. I think especially coming into election, a lot of people are starting to look at prediction markets as a somewhat more interesting polling mechanism to get more information. I wouldn't be shocked if we start to see the narrative of Polymarket and prediction markets start pushing as NFTs did back in 2021, 2022. That is something that can be explained to normal people. It seems to have a use case. It's popularized by stablecoins. You're not taking a ton of risk in terms of technical risk or any sort of just random hack risk, since these markets have been around for a very long time. It's just people just haven't traded them. I will get into Polymarket in a second, but actually I wanted to pull up the layer 2 beat. So layer 2s, they are moving. They really, really are moving today, or over the past couple of months now. I think Arbitrum is still number one top topping the chain here. But as I've said before, I'm really personally, like, full disclosure, I'm sort of keeping my money on Manta. I think people have faded Manta to a point now where it's starting to overtake Base. Just look at these right here. Manta has overtaken Base. That should be enough to signal to you that Coinbase, with all its name brand notoriety, Manta has basically outshined it and captured more TVL. This should signal an issue to people. I've sort of mentioned before, kind of in friend tech and in side talks with people, that Manta reminds me of the Asian trade. So in Asia, sort of 2020, 2021, everyone faded Binance Smart Chain. And I think most of it is because Westerners just don't necessarily trust Asian markets. But Manta, because it's predominantly, it looks like it's an Asian team, I think most of the world is sort of fading it because they're just thinking, oh, it's a scam, or, oh, this team's not serious. This team is very serious. I've read their documentation. I've seen what they're doing. I think they're a very interesting, very secure team. They've come out with a solid marketing strategy that has captured more money than Base, with Coinbase backing it. So this should signal to people that, hey, this is a trade. I'm letting you know now. I think there are times when being a racist is a little ridiculous whenever it's very clear this team is real. So I'm going to leave that as a serious comment to Westerners that just pretend this particular chain doesn't exist. I'm also going to leave it as a serious comment to teams that are fading the idea of moving onto Manta. Some teams have basically said, oh, we're not interested, the security model's weird. It's the same thing I saw with Binance Smart Chain, and I'm personally one of the people that faded it because I thought, oh, it's Binance, it's a little bit scammy. No, Binance and the investors had plenty of time to get in at $1. Binance is now trading at $200. You can take that as you will, but obviously the technical merits of this system, the marketing that's being done in it, it's moving faster than Base, which really should wake people up. So, going into Polymarket, that's basically my analysis. So if you just want to look at the markets and DeFi markets, like, feel free to stop here. But I'm going into some topics today that I think are talking points kind of going into the next couple of weeks. So I've mentioned before, Polymarket is crushing it right now in volume, and the biggest issues there are the caucuses and primaries. So Iowa caucus is Monday, January 15th. And we also have New Hampshire coming up, and I believe New Hampshire is the 23rd, and Nevada is February 8th-ish, somewhere around there, 8th or 2nd, somewhere around there, but it's in February. Polymarket is crushing it because they're basically the only ones hosting real prediction markets on political betting. Not going to get into legal issues or politics with that. Not really going to say anything about the particular candidates, but what I am looking at is just the trade itself. I expect a lot of volatility here because as some of these numbers shake up, you're going to see, you're basically going to see some numbers shake up as the polls come in and as people really see who people are voting for. I've been honestly shocked at not only the growth, but the amount of effort put into Nikki Haley. Nikki Haley has been generally going up, just in terms of like the Republican side. It looks like they're the only ones really running a sort of primary and caucus system right now. Democrats, there really aren't any candidates there. Most of the bets there seem to be traders that are betting right now on or shorting Joe Biden, appear to be doing it just basically for health reasons and trying to figure out, trying to basically place bets on who's really pushing, or I'm sorry, if he ends up getting sick and is not able to continue with campaigning and continue the presidency. Some of the issues, at least on the Republican side, are just who is going to take second place. So Polymarket did end up pushing out a market, so it's got over $1 million bet. So right now, I've sort of said, hey, short Vivek. I think any Vivek trade is really about when he's going to exit the race. He's very charismatic. I think he believes he has a shot, and I just believe that as a presidential candidate, you have to believe you have a shot, but it's very clear it's just not going to work. I think at the moment, you're probably not getting a better return if you short DeSantis or Nikki Haley. I think there's a lot to be said about which one of these candidates is going to continue. I don't know if both of them are going to continue. Once you start seeing Nevada come in, some of these candidates just drop out because they're basically saying, look, I don't have the numbers. At the moment, you can see right now in Iowa, Nikki Haley and Ron DeSantis are the only real contenders. Everyone else is pretty low. I mean, I'd also like to pull up the winner. So the winner right now for the presidential election, again, looks like Donald Trump is leading in terms of the market. I have many things to say about that. I think most people do believe it's sort of 50-50. There's been some information about polls. I don't know what kind of real value you can get out of that at the moment. It seems pretty interesting to see. My issue with a lot of sampling is sort of whenever you look at the science of sampling and polling, a lot of the issue just has to do with any sort of selection bias in who you're sampling from. I am someone who thinks that political markets are still a very niche category, and the type of people that trade political betting markets are probably young males, 20 to 30, who are interested in cryptocurrency. So this particular market is saying, hey, Donald Trump has, 48% chance. There's much to be said about whether or not that's true, but I think you have to, again, young males, tech enthusiasts, 20 to 35 years old that are willing to self-custody cryptocurrency, move it off an exchange, and host their own wallet and bet on political markets. That sample is not exactly representative of the nation. So, I take this as a sort of possible trade that maybe you can do short Donald Trump along Joe Biden. Much to be said about that. I'm not going to exactly tell you how to trade here, but I do think in some sense there is some sampling bias here. An obvious one too is maybe Nikki Haley. It looks to me that some people do believe that Trump is going to eventually fall out of the race. So a bet on Nikki Haley is essentially a bet that the Republican candidates sort of move away from Trump. There's been some talk of it. Again, I don't really care too much about politics. I'm mostly interested in like the betting and the sort of thesis required to believe in a bet. And sort of like how you might be interested in like building a portfolio or building a particular position where you're trying to harvest some cash here. So essentially my issue is sort of, hey, there's Vivek, RFK Jr., Gavin Newsom are sitting at 2%. Possibly betting on Gavin Newsom. It would be very, very interesting if Joe Biden got sick over the next year and Gavin Newsom exploded in popularity. He's really the only candidate on the Democratic side that seems to be somewhat interested in a presidential candidacy. There has been a lot of talk that Gavin Newsom is probably next man up in the election coming into 2024 or 2028. So, there's a lot of discussion there. But I did notice Star Spangled Gamblers actually had someone who looked a little bit at actuarial analysis, and it's basically saying a lot of people are wildly overpricing the chance of Joe Biden falling out due to health issues. In terms of his health, the average person of his age, I believe he said something like it's a 9%, like in terms of this may seem a little odd. I used to be somewhat interested in actuarial science, but they do generate statistical models for death rates. This is normal for insurance companies. It's necessary for insurance companies. So bear with me if you think this is a little macabre. Joe Biden at his age, they discussed a little bit about the statistical models of people at his age, and they sort of say there's a 9% chance of death, which is basically 91% chance of survival just every single year. So in that case, there's a lot of people that seem to be betting that Joe Biden is not going to continue the race, especially specifically not in the presidential election candidate, but in the Democratic nominee. So it seems a little odd that they're betting 24%. And this specific trader in Star Spangled Gamblers, excuse me if I'm wrong, basically said, this is just way too high for a bet to be no, whenever he has a chance of, for health reason, falling out at 9%. I'm not going to say this is a particular trade you could do, but it just seems too high, especially for a person at his age who's still able to ride a bike, still able to do some things that, at his age, he is going to have some struggles in terms of walking and mobility, but I believe that some people politically have a little bit of bias and believe he's going to fall down a single set of stairs and just end up dropping out of the race. It seems to me that this is not true. He's probably going to run. He's probably going to win, regardless if the Democratic side doesn't actually want to run primaries. They seem to have backed him. He's going to be on the ticket. In terms of the nominee, this is an interesting one. But as I said, so Gavin Newsom, in terms of the nominee, it's 12% here. But in terms of the winner, you can get him at 2%. Is that something of a flyer? Is that, I think, again, I like value trades where, hey, if you win, you make life-changing money. Is it something to kind of think about? Maybe. 2% getting Gavin Newsom. It seems odd to me that there's traders that believe that Joe Biden is 24% unlikely to be the nominee, but then they see Gavin Newsom at 2%. It screams to me maybe a sort of, again, hedging trade where you short Joe Biden, long Gavin Newsom. So this could be something you're interested in if you're into political market betting. I'm actually not interested in political market betting. I don't like it because it's leverage, but it's kind of looking and analyzing the market itself. These are just things that I have seen and kind of want to think about. Next up here, we have reached the start of what I believe in terms of the ETF is a lot of backtracking. And I think crypto media should be called out on this because they are absolutely ridiculous. This ETF has been shilled to everyone since October that it's going to be the greatest thing since sliced bread. I've said before, I think something's fishy with it. I personally felt that groups like Fidelity might have Bitcoin sort of in the back house, ready and willing to be sold, that are not going to hit liquidity markets that regular participants like DEXs and exchanges are involved in. I've sort of learned a little bit more like, hey, a lot of the back end custody and selling is handled by third parties, mainly Coinbase and other places. But the big trades that have happened with the ETF is it seems like GBTC is unwinding. There was a really great article or great list of tweets by David Choi, who talked a little bit about the sort of futures and other wrapped Bitcoin and Ethereum trades that have been going on for a long time. And it basically, you can go and read it, figure out for yourself what you think about it. But long story short, a lot of people are just getting out of the Bitcoin ETF trade, especially at Grayscale, which if you look at the total net inflows, the total inflows of firms that want to buy this ETF product is lower than the amount of people selling GPTC. So net, we are actually losing money in Bitcoin exchange traded products, which it's really hilarious. It's hilarious in a sense of for the past 3 months, I have just never trusted this ETF trade. I feel like if everyone's talking about it, it's probably something that is going to wreck your portfolio if you go all into it. It's fun to sort of think about and talk about, but I have seen too many people on crypto Twitter that are basically starting to talk about, hey, they're getting liquidated because they leverage traded this run up, assuming, as crypto media has said, that, oh, there's a ton of pension funds and there's a ton of institutional investors waiting on the sidelines. As anyone that sort of knows anything about decision making, a lot of people will say, oh, I'm interested in something, but they won't actually go through with the motions to do it. It shocks me that crypto media and a lot of these pundits have been shilling the ETF, assuming it's going to cause massive price increases, when the reality is nobody showed up at the door, at least last week. There's much to be thought about in terms of whether or not it could generate interest. But I, again, am mostly interested in cryptocurrency for its peer-to-peer value, its transactional value, its value to help decentralize finance, its value to help individuals participate in the financial markets without licensing or permission. I could care less about the ETF. Even if you thought, for example, it's a better marketing for just cryptocurrency in general, there's something to be said about that, but does that mean that prices need to increase? I don't know. I listened to so many people discuss, these people were basically saying quite literally boomers are going to buy our bags. And to be honest with you, I've just been kind of disgusted, and I've slowly tuned down just how much respect I have for these guys, because it seems like they don't want to make money on the merit of the technology. They just want to make money and figure out fun ways to sell it to institutionals to get the price go up. And, it's cool to get rich, but I just don't think you should get rich for no risk. If you're not really getting rich and you're able to defend your cash flows and defend your purchasing power. I think that's a way better system and technology than a few crypto guys that got it in first getting rich. I don't know. I just like, as someone who also knows people who are older, and also someone from New Jersey, a lot of these pension funds are very underwater. If you look at demographics, most of the cash flows for these pension funds, for these institutional funds, are actually negative because people are starting to retire. The baby boomers are retiring, cash is coming out. I have no idea where they thought cash was coming in to buy Bitcoin on almost all analysis, not even considering that it's looking more and more likely that we are in a recession. Jobs markets are very, very much on a edge, and especially jobs and careers kind of on the edge of the risk curve are very, very much not doing very well. So if jobs aren't doing well, the businesses aren't doing well. Somehow these people thought that, if we're in a recession, pension funds are losing money as people in the boomer aging group leave the workforce, stop adding money into their pensions, and are actually withdrawing. I don't really see how these pension funds and institutional funds can even consider adding anything to the balance sheet. They're trying to sell things. They're probably not going to purchase something that has a volatility of 50 to 60%. So, I don't know. I mean, I think it's kind of unfortunate that these people have just resorted to like what I would consider circle jerking the price. There's a lot of great stuff in terms of technology, in terms of products that are coming out. And for the past 3 months, it's kind of been annoying to just listen to endless podcasts and talks about the ETF. And it's unfortunate that some people have to kind of live with some egg in their face, but these are the same groups and media companies that are promoting that the ETF is going to be the greatest thing since sliced bread. Now they're promoting headlines that, hey, the ETF never actually mattered. I don't know. I saw this and I wanted to share it because I think it's the most hilarious thing that 10 days ago it was the greatest thing since sliced bread and the price is going to go up. And now we're seeing a complete unwinding of the GBTC trade and no one is buying. So I guess that's it. I think that's a fun little weekend update. I'll try to get a video probably Wednesday. Monday's off. Just in terms of the holidays, I don't think there's going to be much trading going on. But I want to try to keep this up and try to improve this content here and hopefully give you some actionable information that's not just price shilling. I think that's the main goal of this project here. So thank you so much for everyone who is just living on chain. Have a great week, and I'll see you next time.